What's going on, coin traders? Thanks for joining me for the show. Looking at fetch.ai, FET on that ticker. Nice upside day for continuous multiple days that we actually haven't seen for a lot of the rest of the cryptos. So despite the fact that a lot of other cryptos are pulling back after the big SEC announcement a couple days ago, now we have fetch.ai still showing a lot of that strong follow through like a lot of the rest of cryptos did miss. So what is going on with fetch.ai right now? Well, one of the big things is that we're actually in this big consolidation pattern that actually started around the middle of August. So for about 2 weeks now, and then finally seeing this nice big explosive move with a lot of that follow through. Great sign for fetch.ai and a lot of the speculation for a lot of the AI cryptos right now. So fetch.ai is going to be a little bit more of that stronger name for the AI space. And if we look at volume right now, one of the things that's interesting about this volume over the current breakout and the explosives move is that when we did enter this nice consolidation and tightening range, we actually saw a complete decrease in all volume, including mostly bullish volume. So as you can see on the 13th and following, that's when we did get our bullish climax for this consolidation. Typically, that is what we do find when we do enter these tightening range type patterns, is a decrease in overall all volume, which is kind of why it leads into this tightening range of higher highs, or higher lows rather, and lower highs. And so it's kind of interesting right now why 2 days, day over day, we are still getting a little bit of increasing. And although we are only a few hours into it, we're currently about half the volume that we did see yesterday on the close. So we could actually get the current daily candle to have a very nice increasing bullish volume as well. Ideally, we'd love to see this volume top out, and currently volume was at 21.262 million, but not necessarily super likely to think that we're just day over day over day over day going to get continuous upside increasing a bullish volume, especially the higher this does get. So we are going to have to be mindful of where we're going to top out and actually start to see a retracement and consolidation here, allowing this volume to cool down. Now, if we zoom in on the current right now, you can see that we're pretty much just about to get this nice bullish cross on these exponential moving averages. So we are still waiting for the 26 right now to actually rally up above this 50, and then we will be in a completely bullish formation. So on this overall consolidation pattern, we did have these exponential moving averages getting extremely tight. So tight exponential moving averages along with a consolidation pattern, we were due for volatility. And the fact that now we're seeing this explosive move does highlight just how strong these patterns ultimately are when they do end up breaking out. So do want to focus on a little bit of upside targets right now. And as you can see, a lot of the strength of resistance is actually starting to be broken already, as we do now have a higher high on fetch.ai. So current candle looking at a high of 25.68 cents. Previously, before that, we were looking at a high of 25.59 cents. So do have an extremely strong zone of resistance here. And if we do look over to the left and draw this nice little horizontal line, one of the big points that we're looking at was previous support and also previous resistance on this move that is going to be coming in right at 26.13. We could have that extend up to a potential zone up to about 28 cents, and even on the extreme end upwards at 30 cents. So several big resistance points to target up ahead. And that's why, especially like we said, although we could see a little bit of increasing bullish volume over the next couple of days, are going to have to be mindful that we are going to start to approach a lot of these big resistance points that were prior resistance and also prior supports. So now, for example, if we do pull up VPVR, volume profile, visible range, you can see that big points of mass up overhead, especially since we have smashed already above the quarter, are pretty much going to come in from those targets, like we said, up until about the 30 cent, which is when we're really going to taper off. So if prices can rally up to this 30 cent and maintain it and then finally get through 30 cents, we are pretty much going to start to see prices get back into the mid 30 to 40 cent range. Obviously, that's a little bit farther term analysis than we're going to be doing in the scope of this video, though, but just know that we are looking at several resistance points up overhead. And so despite the fact we are looking at very nice bullish volume and a nice bullish breakout from this pattern, still a realistic expectation and approach to trading this right now, and for what price performance and movements are going to do for fetch.ai, still know that we're likely going to experience a rejection here at some point soon. Along with that, I actually want to pull up the daily RSI, Relative Strength Index. And you can see current right now, we're at 69.66. So barely just under the 70 line, approaching that. And I expect that with the next trading day or so, we would start to see RSI get into that level. But we do know that RSI overextended along with those big resistance points that we do get met up with typically do result in a little bit of that pullback. Since overbought combined with resistance does usually mean a little bit of sellers or buyers exhaustion, and then we do start to see sellers step in and actually start to normalize and retrace. But topping out this RSI, we do have pretty much right around the 60 line would be a point that we could retrace to, since that was big resistance on this RSI. So now if we do get rejection and some resistance, what would we actually be looking at for some supports here? Let's go ahead and turn off volume. Well, downside support to the low end is going to be about 22 cents. Current, we are looking at about, not necessarily expecting it to hold, but about 24.5 cents down to the 24-cent level. And then finally picking up the slack would be the 23.22. So as you can see on the chart, plenty of lines of support to the downside. Most notably, though, if we do retrace all the way back to 22 cents, which is where we had a lot of our resistance coming in on this consolidation move prior to the breakout. A lot of times we frequently do expect those levels to return since it is a big point. And also when we do get those extended moves without any type of consolidation and retracement just yet. So if we do actually want to look at where the breakout occurred to current trend high, a return down to that 22-cent level would be about the 61.8% retracement, which is still fine given the condition of this type of breakout. However, retracing down to the 38.2 would be 23.6 cents, which would actually sit pretty nicely inside both the 23.22 as well as the 24.06 supports. And that's obviously a lot better for the defense of a lot of these previous resistance points now flipping into support. So that's the thing about losing that and retracing back to the 22 is that we actually lose a lot of the strength of these previous resistances as support, pretty much from about 24 cents to about 24.5. And that's one of the reasons why we ideally would like to see that point holding up as well. Flipping over to the 2-day chart now, a couple of things to talk about. We do like our 2-day chart, and specifically, I want to turn off the 12 and 26 period exponential moving averages here and just focus solely on the 50 because we had a relevant point, 50-50 resistance, flipped it as resistance, and then we also saw it confirm backtest as resistance and resistance. So we know that multiple attempts, multiple touches, this is an extremely relevant line of exponential moving average that we're focusing on. And on the current 2-day candle, that just closed here. Nice big bullish candle breaking out of this consolidation point and then also closing very nicely on top of this 50 period exponential moving average, which, like we said, has been resistant so much basically since the start of the year here until we actually flipped it into a bearish resistance back at the middle to end of April. So hopefully now, since we are flipping back on it, just like we did, for example, at the end of December and start of December, turn it into support, and that's actually where we saw a lot of rally step in. So hopefully that can be another similar case here where actually we would be able to backtest it and confirm it now as support before seeing the next leg to the upside, especially since we have been setting longer term higher lows. So let's actually go ahead and talk about that too, because on this 2-day chart, it's actually extremely relevant because we have our lowest level of closing support coming in right at 1807. And then immediately following that, we did set a higher low in terms of closing for this 2-day at 1962. So very nice stair-stepping pattern forming higher lows, even though despite the fact we were kind of getting lower highs on this, higher lows actually pushed us into longer-term consolidation on this chart as well, which again, now very nice bullish confirmation and that breakout. So just like on the daily chart, when we do start to get a little bit more of that resistance up overhead, we're going to likely expect to see some inside bars on this longer chart and actually have some of these exponential moving averages start to roll over now in this nice bullish fashion, thereby flipping us completely. So as you can see right now, we're getting a little bit of a touch and cross of the 12 and the 26. So good sign as they do start to continuously approach this 50 period exponential moving average as well, especially if we continue to get a lot of this nice follow through with a lot of that volume. But like we said, not really expecting too much more of a rally and up overhead on this 2-day too, expecting nothing more than getting up to 28 cent. I wouldn't really anticipate too much more without some sort of consolidation and test, being able to confirm and back test anyway a lot of those previous resistances as nice supports and actually confirm a nice flat floor and stable option to allow the bulls to catch their breath and then provide future opportunities for those next moves to the upside. All right, so flipping into the weekly chart now before we wrap up, and obviously you can still see on the weekly closes higher lows for that, and the current weekly candle still looking good, but right now rejecting and resisting off the 50 period EMA. So despite the fact that we are bullish on the 2-day time frame, we still know that we're going to have to get over this exponential moving average, especially since looking back, these exponential moving averages were resistance. But what's actually nice and notable is that if we turn off the 50, for example, now on this chart, we're looking at the 12 and 26 being periods of resistance, which currently the weekly candle is looking like a nice bullish break on top of that. But like we mentioned, still seeing resistance off the 50 period, which right now is at 25.64 cents. But if we actually go ahead and clean this up, and let's actually turn off all the exponential moving averages as well, because a very important key level that I do want to talk about here is the big weekly closing resistance and also weekly closing support. Those two levels come in at 23.66 and 24.08, which were those two levels that we actually talked about previously in the show. So the fact that right now too, very nice bullish candle coming in to break those is going to be extremely relevant. The fact that especially too, higher lows on this weekly close, now confirming a nice bullish candle, is going to be confirming that we are establishing our lower supports. Accumulation zone is going to be set, and now we are starting to change the trend, especially seeing new higher highs on this weekly ever since putting in our low back at the start of June. So definitely very good signs and setups right now, especially if we can maintain this type of weekly candle close. Obviously, if we do see bears pushing prices down, that's going to be a bad sign. But assuming over the next 3 days and 19 hours, as of time of recording until the next weekly close, we're going to be looking at a very nice upside opportunity, knowing that this longer term pullback that we've been experiencing ever since about the end of January, February is pretty much going to be done, and likely we're going to be looking for the next leg of upside. So that's pretty much what we're going to be looking at right now with fetch AI, FET on that ticker. Would also love to know everyone's thoughts and predictions down in the comments sections below. And if you did enjoy this video, would appreciate hitting the thumbs up, like, and subscribe button. And if you did like it and don't want to hit those, then that's fine just as well. But as always, do appreciate all the continued love and support. It does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.